Good afternoon and welcome to this edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisho Greater. On the show today, we take a look at a new digital tool that will help companies engage with their workers. We take a look at the outlook for the retailer Truworths, and we take a look at what the crisis is at Eskom and what this means for your pocket. But before we get into all of that, do remember that we do welcome your feedback and comments, so you can send it through to moneymatters@abn360.com. But next up, let's take a look at the trend of the week. With the gold and coal mining sectors heading into wage negotiation season soon, everyone is jittery that we may see a repeat of last year's record-long platinum strike, where trade union AMCU even took employers to court to try and prevent them from communicating with their employees. The sector has been characterized by hostile relations and poor communications between employers and their workers, something that inspired Deloitte Digital to develop a new workforce engagement solution. In studio with me to discuss this and tell us how it works and the difference that it can potentially make to this industry, I am with Joanne Doyle-Went. She's a senior manager at Deloitte. Thank you so much, Joanne. Tell us about this management system. Workforce engagement solution. What is it? How does it work?
So workforce engagement solution gives an organization, and particularly organizations like mining, retail, manufacturing, an opportunity to commute directly to their employees. So, you know, we see a large scale workforces, very diverse, lots of different kind of levels within various different skills. And also what we must also look at is the language preference of the particular employees. Yes. So this tool is a mobile-based USSD platform that allows the organization to communicate directly to their employees, allows the employees to actually communicate back to the organization, and it allows for a really opportunity to create trust between workers and the employer.
So if I'm an employee and you're an employer,
yep,
I would have an SMS that you would give me daily updates. Is that how it works?
So it's not just an SMS platform. Okay. I think that we have used SMS technology in the past, which has really been unsuccessful in these kind of labor-intensive organizations. So where SMS is just one part, it's very important to the USSD functionalities, to be able to dial into a particular string and to be able to broadcast communication, survey, and then reward for engagement, which is really important.
Has this been rolled out?
It has been rolled out in one of South Africa's largest mining organizations, and what it has allowed us to do is to really gather insights right from the coalface, to be able to drive those insights back into the organization, and to ensure that employees are always informed of company changes in the organization, allow us to push safety messaging. And I think a really important part is the content that we create around that. So what we're able to do is an individual is not just, Miner 74. He is an individual that has particular likes, and we build all psychographic content around that. So it really changes the engagement from an employee number to an individual.
How do you tap into employees? Like you said, it's a very diverse employee base that you have, different cultures, different languages, different likes and dislikes. So how do you tailor make it or make it relevant to the employee base?
So actually what we do is we roll out a very strategic research and focus groups to identify, first of all, how do you feel about current communications? Is there an understanding? Is the information too big to digest? Also, we find that this blanket communication doesn't really work at the moment. So be able to actually identify with and spend time with each employee. It gives us an opportunity to develop content that is unique to that individual, that actually makes a difference and builds trust between an organization and the employees.
What is the incentive for the employee? For you to talk to me, I may be a bit wary. Why would you like to gain my trust? So what is the incentive?
So first of all, I think really important, it's a voluntary engagement, and the employee wants information from the organization. So what we do is we put a whole host of a package of rewards together for that individual. Rewards may be anything from airtime to mobile vouchers, but it is around rewarding for information, to be able to have the voice to communicate what it is that you want, and we reward for particular pieces of engagement.
How are employers going to be able to contend with these big unions that have spent years growing trust with their employees? You look at the likes of the National Union of Mine Workers, who've been around for decades. how are you going to be able to contend with the trust that they've built?
So I think we must be very clear in terms of workforce engagement. So workforce engagement is not something that can be switched on to be able to, when we lead to wage negotiations. It's something that an organisation does over time, and it really is to gather insight for all parties involved, to be able to communicate better, to ensure that people are happy, people are productive, and increase the operational efficiencies for a particular business.
Joanne, thank you so much for telling us about this, and I sincerely hope that this is going to be a mechanism that can help avert all the hostility that we have seen with wage negotiations coming up. Thanks to Joanne Doyle-Went. She's a senior manager at Deloitte. Time now for us to take a look at this week's Punt of the Week. Truworths South Africa's #3 listed clothing retailer reported virtually no growth in the profit in the first half of the 2015 financial year. It blamed it on the debt-laden consumers who are spending cautiously and also battling unemployment. Finweek contributor, that's Moxima Gama, joins us from our Cape Town studios to discuss the outlook for Truworths. Moxima, you're always so optimistic, but why are you optimistic on Truworths? They have such a high exposure to credit.
Well, I'm basically a technical analyst, so it's purely based on a pattern breakout. Truworths has been pulling back for at least more than a year, and it's formed something called a falling wedge. So having to break out of that is quite a big deal, especially because it's taken so long for that pattern. I mean, there are some fundamentals to it that could add a bit of risk, but Truworths popped out particularly because it has more upside potential than its peers, which I think are a bit overexposed at this point.
Before we talk about some of those risks, you said it's got upside potential in comparison to its peers, so what is it doing differently?
Well, there's a lot that it just needs to, it's trying to catch up a lot with its peers who have at least gotten some of the international brands to come in so that they have that rand hedge. And Truworths has pretty much had its own brand, and they need, and besides they also have that 71% of their sales is credit sales. And with the current economic conditions, they will kind of struggle. But I really feel it's more sentiment based than fundamentals. As you could see with that falling wedge pattern, they're breaking out of that. I mean, that's it's almost 2 years or even 3 years that it's been pulling back. And now that it's reached that 88.20 level, and once it then recovers back to that 117 mark, we could then see it do at least another 110% upwards as it starts a new bull phase. So I would really take a neutral position and then just go aggressive above that 11, rather that 117.50 level.
Moxima, last week we spoke about data tech, and you were adamant that we could see it reach its all-time highs once again, and you're doing the same thing with Truworths here. It's trading at around 87 Rand. You're thinking it could go back to about the 185 that we saw when it was sitting at record highs. Again, I really must ask you, you see this happening within the next 1 to 5 years? So basically what you're saying, as a person who's looking to invest, this would be the right time?
It would be the right time. What you'd be doing is catching it, specifically with data tech, if we have to go back to that one, would be catching it from a bottom. So this is purely based on patterns that are forming. And because they have corrected for some time, there is usually that tendency for them to then complete a 100% retracement. And catching them at these levels would mean you're catching it at the bottom and making it a fruitful investment for the long term. So I am optimistic. I mean, they won't go in one straight line upwards, but it would be gradual upside, and any pullback would then be a buying opportunity. So I am pretty much optimistic on both shares.
Moxima, thanks so much. That was our Finweek contributor, Moxima Gama. Up next, let's unpack this week's cover story. Well, what a week it's been. We've seen Eskom CEO Tshediso Matona head to the Labour Court to have his suspension set aside. Chairman CEO Zola Tsotsi is fighting for his job, and government continues to insist that there is no real crisis at the utility. Well, we'll be joined by two journalists a little later on to dig into these developments further. But we have our Finweek editor, Jana Marais, who is also joining us from our Cape Town studio to discuss this week's cover story. Jana, like I said, it's been quite a week. So what do you make of all of these developments?
Hi, Tamisha. Yes, I think never a dull moment, and unfortunately, not a lot of good news coming out of Eskom. And I think what's particularly concerning is that there's serious question marks about corporate governance at Eskom. We see reports, I think today, the Mail and Guardian, earlier in the week, Business Day, and I'm sure your panel will talk about this at length later on, but clearly there's some real serious issues around their tender processes, and this is, this fight has gone to board level, and the question remains how much of the expulsion of 4 top execs have to do with a fight over control for the Eskom's massive procurement budget. And then, of course, there's the Medupi, strike at Medupi, and other issues like non-payment of bills. It just looks like a lot of incompetence and really serious corporate governance issues.
Well, I'm definitely looking forward to delving into that a little bit later on in the show. But with crisis, there's always some light, one would think, at the end of the tunnel. We've heard different companies talk about the opportunities that this brings. Do you think this might change the market, and how might it change things?
Yes, I think Eskom, with Eskom specifically, we'll see their funding. We already see funding requirements ballooning, and the cost of financing those loans becoming excessive. So we'll certainly see electricity tariffs going up much more in the coming years, which really will make it much more viable for new entrants to come into the market and offer their products. This week we saw Grant Patterson, formerly from Massmart. He's going to spearhead American power company NRG Energy's push into South Africa, and they really offer more decentralized solutions, companies building their own power plants on the roof or whatever the case may be, depending on what their needs are. And we saw, I think, power ships, can offer solutions in the medium term. So certainly there's a lot of opportunity for private sector players, and I think we'll see a lot more international companies pushing into the country and trying to offer solutions here that will make financial and business sense. And as long as Eskom's troubles continue, the more they're going to lose customers or at least consumption.
Jana, thank you so much. And Massmart CEO is not alone in this. We do remember Brian Joffe, I think a week or two ago, speaking to one of our colleagues and talking about that South African corporates should maybe come together and look at putting together a power plant here in Sandton. So we'll see what the suggestions and opportunities are. Thanks so much to Jana Marais. She is the editor at Finweek. I'll stay tuned, because coming up we'll be taking a look at what the impact of Eskom means for you and your pocket. Did you say I'm getting fat? Welcome back. You're still watching Finweek Money Matters. Remember, this is the show that helps you manage your finances. Well, Benjamin Franklin said there are only 2 things that are certain in life: death and taxes. And in South Africa, we can add one more: much higher electricity prices. I'm joined in studio by Tina Weavind. She's the Finweek contributor and author of this week's cover story on Eskom. I also have with me Sikonathi Mantshantsha, a journalist at Business Day and Financial Mail, who have been following the story very closely for years. Thank you so much. Tina, let me start with you. We've been talking about these developments at Eskom. Just how bad is it?
Well, it's really bad. I mean, there's a massive shortage of money. There's a huge amount of money that has to be spent. They won't be able to keep the lights on otherwise, and they're not able to do it at the moment. But essentially, from a financial point of view, they're in really enormous trouble. Mm-hmm. They've got massive funding shortages, and they've just put forward this proposal to have it's a 25% increase, but they want to do it right now, and they're doing it in a different way to the way they would normally do. They're approaching NERSA to say that they've now got these 2 issues that they need to fund. So they've got to get diesel and they've got to be able to pay the independent power producers, and that's going forward until such time as they've got a Medupi actually running. One of the, they've got real power coming.
I'll come back to you, and I want you to help us crunch the numbers with respect to how much this is going to impact me in my pocket. But Sikonathi, this is definitely an area that you've been focusing on for years. I know that you've been trying to get a hold of Mr. Tsotsi with no avail. So just tell us the latest, these boardroom wangles that we've seen. What do you know that we may not know about?
I don't know what you don't know. What I do know is that Mr. Tsotsi has finally broken his silence in a story to the Mail and Guardian. I sent him 36 questions over 3 days, asking him exactly what's going on. Why is he getting himself involved in matters that are way below his authority as chairman? Why is he running the company himself? And it seems he seems to be interfering and undermining the executive. He basically sits there day in, day out, 5 days a week, 6 to 7 hours a day, which is a full-time job, and he's a non-executive. He's got no business being there on a daily basis. All he has to do for Eskom is oversee the board and help where he is needed, oversee management. But he seems to be missing his days as an Eskom employee back then.
So you said he's broken his silence to the Mail and Guardian. Did you get any of the answers that you were looking for there?
He has not responded to any of them. He certainly has not returned any of my messages, but that's not the big deal. The big deal are the questions that he needs to answer, and he's finally spoken to the Mail and Guardian yesterday about some of the issues. So I hope to get hold of him today and expand on them and certainly get those answers for South Africa.
Tina, Sikonathi is obviously chasing Zola Tsotsi. You've written this week's cover story. What were the key things that stood out for you? Was it just really the focus here on Medupi and what this is going to mean for the consumer?
For this week?
Yes.
No, this week was much more about what it's going to cost and the fact that the prices have to go up. As far as they're concerned, and the fact that it is going to probably go up simply because for some reason they've only kind of worked it out now with this war room. That it's going to be incredibly expensive, and they've got to do something right now.
So how expensive are we talking?
Well, 25% increase, and also they've had to go out and I think that they've got a 1.8